Now, this is the most important lesson you need to learn. This scanner is simple, straightforward to use. I hate complex things. How? You basically, if you have understanding of basic market is good, all right? But if you do not have, no problem. Obey the rules of the scanner. Very simple rules of the scanner. And what this rule of the scanner says? The scanner says, come into the market. First, go to daily time frame and see the momentum of the market of the previous candle. The market previously was bearish. Those of you who have about 4 or 6 people I taught in one particular training, CCCT, candle continuous theory, is that if I come on my own, which you may not know, I'll go advance. How do I go advance? I'll pick this like this, okay? I'll go advance like this, but you don't even need that advance. So when I go advance like this, I want the rejection from here and here. So anywhere the rejection happens from, I'm good for it, and I would be taking my trade. But you don't even need it. You have a scanner that's helping you straightforward, okay? And that's why you don't entertain fear. So here you have come, the market is bearish. That means we are saying possibility or chances of this market continue to be bearish is high. Because this was a support. This support was strong. But since then, we have been rejected. Now, when we are taking a trade, I say trade is summarized into 3 things. Where, why, and when. Where is the institutional footprint that you are waiting for the market to come to? That's the rail station. You want to enter metro. Will you jump at it as it's moving? No, you wait for it at the station. When you enter to the station, okay, why will I enter? They have opened the door. You enter. When should I sit? You see a vacant seat. You sit. That's it. That's how trading is. Now, if you look at this market reacted to this fair value gap of daily time frame. Forget about those English. Now, let's go straight to it. Since the market was bearish yesterday, I'm suspecting that the market will be bearish today. So, and this momentum candle was high. Even though the market reacted, but it didn't sweep this liquidity. That means this market is still very dicey. Can continue to go down. So, I now come to 4 hours. 4 hours is a place I want to find a signal. This 4-hour signal was not today. So that means this one is old. This last week Friday. You can't use that one. You are looking for a fresh one. Okay? Now, on 4 hours, no signal. So if there's no signal on 4 hours, go to your 1 hour if you are going to find a signal. Oh, there's a signal on 1 hour, but that was not today. That was yesterday. So that means somebody who got this one yesterday was already on a trade, running or have even taken some profit. So that means this is not for you. You now say, oh, let me go to 30 minutes. Now, on 30 minutes, you have this signal. This was still yesterday at 8:30 p.m. or something. So the market continued though. That's what it means. The market continued. But so that means at morning, you probably do not see trade. It's very possible. Or if you see trade, that means you went down to 15 minutes. You could find trade. Now, let's look at it. If you go to 15 minutes, you're going to find trade. Now, the 15 minutes too is still yesterday trade that continued. You didn't find a trade. So on 30 minutes, as at the time, 8 a.m. this morning, you find a trade. So let's take out this. And I say, now you have seen a trade on 30 minutes. That's why I ruled this. So all I need to do, if you find it fresh, you just go down to 5 minutes, 3 minutes to see appropriate entry model. So we now went down to what? 5 minutes. Yes, the signal was correct because we say our signal setting is taken when there's a 3 candle close. Go and read the script that was given to you. If you don't read it, you are wrong. So we went down there and see that the signal was correct, perfect. Number 1, we are under rejection of a resistance. Number 2, it gives the 3 candle close, which means this is accumulation, this is manipulation and distribution. Now, I love to still refine. If it's good, I refine down to more lower time frame. So refining down to more lower time frame, no problem. Are we good to go? Yes, you will have entered here. For people who don't care so much, at this 5 minutes, they will short the market from here. And then there are stop loss above here. But you will see that this market was critical. Do you know why it's critical? As at the time you are entering, you see this line was green. That means it's support. But 30 minutes give you the set though. No problem. Let's manage and go and see how we go. Now, but me, Felix, I wouldn't take that trade on 5 minutes because I still have 3 minutes seated and waiting for me. So where will I take the minute? I'll go down to 3 minutes. Now, on 3 minutes, still give the same signal. You can see that both 3 minutes and 5 minutes gave the same entry. No. I want to go to the lowest time. Now, going to lowest time, you can see now, my trade will be here. This candle. Can you see? This is refinement. Now my stop loss will be very small. So that means about 60 or 70 or whatever as my stop loss. That means my 1:2 risk reward will be so fast somewhere there. Then you are now creating more positions. That was when we now check. So as you enter the market, you have taken TP1, you have taken TP2, possibly. Yes, let's check it. Considering your stop loss, look at your TP1 here. You have taken TP1 already. It's yours truly, successfully done. From 8:07 or 8:10 to what time was this one? To about 8:25. Just less than 30 minutes. You have done your TP1, which is 124 pips done. Now, but because you have another position open, you are now trailing that one. So that one now has done about 170 pips and is still moving. So once it moves and continue to move, you are trailing your stop loss more. So this could be maybe only trade you will take today while you have secure profit. Remember, I said trading is protect capital, secure profit, trade with profit. So you are protect your capital by putting stop loss, number one. Number two, you have secure profit where you got to 1:2 risk reward. Congratulations. The remaining one that is there, you have put your stop loss below the entry. That's called trade management. The trade code. You can go to anywhere. You may not check chart again. The only thing you may want to do, anyone I'm trailing, I may not put take profit so that I will not just waste it. So you can allow it to be. So if you come back to that point and take you out, you have nothing to lose. You have secure profit first. What you were left, it was like trading with the profit. And then you are just okay. So, but instead of staying that 1 minute, you go back to a more higher time frame so that you will not be intimidated by the activities of the lower time frame. Lower time frame is just to help you to take a sniper entry, but you work with higher time frame not to make mistake or be under fear. Because when you hear much noise, you'll be afraid. So you are calm. Can you see now on higher time frame on 15 minutes, better than 1 minute, you can see that the trade still continue moving gradually. Though it's already reacting to something, it can bounce from there. It's not your business. You have taken the first take profit and you have protected this one that is still running. You are good. Then if you return back to originally where the trade come from, you can now see that you won't be under any pressure. So it means if you clear this down now, the market will go down more, right? My own trade is still running. I just told you that some people are afraid. You take profit from that level. Now, if you enter two positions, you close one and you trade the second one, but you know where we enter from was small place. Now, that means as this trade still continue, you are looking that, hey, man, this market did not even have any support. That's what it means. You are having more of what? Resistance. Look at resistance, no support anywhere. So the only thing that could happen here now is that we that trade regularly, not you people that are not be trading regularly or that understand trading basics, you will now see that there's a fair value gap here. He could touch that and bounce. Anything can happen because that's market for you. Or he could come back to this opposing single candle and bounce. It's part of the journey, right? Or he can come down to this fair value gap and bounce, okay? So these are likely places. This is another fair value gap. Forget this candle. This is the candle you're measuring. This is another fair value gap. If not, if you come back here, it could sweep this liquidity and pull back. Outside that, hello, what's going to happen to it? What's going to happen to it? We'll go to 4 hours because there's a support on 4 hours that it may now come to. So this is how you trade, not giving yourself headache. Sorry. Okay. So you can now see, this is how you now see that, how come your stop loss was very small, 61 pips, and now you waited, and this market, this is 168. That means if this trade comes down to this point, yours truly, it may not be today, can be anytime, you will do 1,680 pips. Even if you use 0.01, you will have made some reasonable money. So that's how you trade. It's still like top-down analysis, but your scanner is helping you to do it with less stress. But if you look at on 1 hour time frame, it means that those places are actually marked. Those points that say this can form a support, it will struggle there, and all of that. So the reason for taking the first take profit is the fact that trade can turn up, can bounce back again. So you are already in profit and secure that profit, then you protect that capital. So no matter what happens, you can find another entry again. And that's how trading is done. Irrespective of the instrument, either is crypto, either is currencies, that is gold, either is oil, is the same thing. All right. So thank you very much. I think this is simple, straightforward for you not to, and I beg everybody, if you are using this scanner, go back to it, study it. I've done a lot of things. There's a document for you. The document is there. But the funniest thing that most of us don't study it. That's the truth. Because there are questions you ask me, I know that you didn't study it. There are questions you just come and ask me. I will laugh. I will just laugh, say, oh, this person didn't go through it. And that is what you need. If I explain 1 million times, you will miss it. But if I explain a little and you are there going through it on your own independently, applying, and study, applying, you will get it. Look at it. This is there. Very simple. It's there. No stress, no too much English. Time sequence. Look at the summary entry. Check daily candle momentum and daily bias. Okay. PBX, daily snapper. If you give a signal like this is what to do, this is what to do. Everything is there. All right, thank you very much, everyone. So do have a nice time. So you have used the other hour for training, and I think it's worth it. So have a nice time, everyone.